We've seen risk-sensitive equities rebounding today and lots of optimism surrounding what plays out in Greece, spurring things on. But therein lies the risk, doesn't it?
Yes, certainly. I think it's fairly apparent that the market is kind of moving either sideways to marginally down, and it's probably not surprising to see it having a relatively good rally. You could maybe argue that maybe in the short term the market has been a little bit oversold, but as the previous speakers have pointed out, things are very uncertain. I think no one really knows how the world is going to play out on not even like a 1 to 2 year view, maybe even just like a 3-month view. I think things are certainly very, very uncertain. So lots of risks, and the markets are very undecided currently.
Of course, we've seen the commodities story really or the resources sector really fueling the upside on the markets today. Kumba at the top of the top 40, followed by Anglo, Sasol, and then Lonmin. What are you making of the kind of sustainability of that upward trend we've seen there?
Look, if you look at the equities on the commodity side, I think it's safe to say that they have suffered the most. I think if you look at the market movers, say over the last 30 to 40 days or so, most of the worst performing shares would be the major commodity shares, the Anglos, the Billiton, the platinum stocks, the gold stocks have done very, very badly. But then if you look at the commodity prices, they've done actually significantly better. And what you kind of have now is a situation where the equity prices have actually diverted a fair amount from the underlying physical commodity prices. And I'm thinking of like iron ore, even on the coal side, maybe even oil, and certainly gold. I mean, gold stocks are down. I think a share like Goldfields is down still 12 to 13% month to date, but the gold price hasn't really moved. So I don't think it's really surprising to see those shares responding to the upside on a day where there's improved risk sentiment. And I think if I was a short-term trader, I think therein lies the opportunity. But it does look I think kind of to us that even on a medium-term view, most of the value due to the sell-off has started to emerge in that commodity complex.
Of course, where we've seen negativity emerges around SAB Miller, and that on the back of the fact that we've seen its bid for Foster's having been rejected. Quite a pullback we've seen on that share price today, falling back 3 3/4%.
Yes, certainly. I think it's an interesting one. It's always difficult when one company buys another, because the market never really seems to give the benefit of the doubt to the company that's making the acquisition, and rightfully so. And I think in this particular case, I think it's maybe hard for investors to get their heads around why SAB is doing it. If you look at historically, SAB has been seen as an emerging market company with superior growth in foreign markets, and now they went into the Australian market, which is a more developed market and arguably a lower multiple market. So I think what SAB might have done is they might have put their own rating, I think, at risk in the short term, as investors try and get their heads around, what does this actually mean. SAB management obviously thinks that they can add value to the Foster's brand, they can extract synergies and improve the earnings of the company, but I think as it currently stands, it's quite hard for us to understand. So what the market is doing is just kind of derating SAB from a premium rating to more of a discount rating, because I think there is a lot of uncertainty like involved with this type of acquisition. Looking at the price that they're paying, it doesn't seem to be very out of line with, I think, what has historically been paid. But on the strategy side, I think, as I said, for an emerging market brewer to move into a developed market raises certainly some questions.